Switching gears, and we got the ADP report, jobs report this morning ahead of tomorrow's big payrolls report. Private payroll employment rose by just 128,000, falling far from the estimated 300,000, marking the slowest growth in the post-pandemic era recovery. And Brad, what really stood out to me in this report and is a major red flag as I draw on my notepads, I take a square and I make it in red and then I put a little check mark next to it. Small employers, small jobs lost 91,000. Small-time jobs, small businesses, I should say, lost 91,000 jobs. And that tells me these are companies very much struggling with inflation and finding the talent they need in this environment.
You know, this is a tick down month over month from what we've seen from the private payrolls numbers, and particularly here. And we've got that kind of amazing work by our team putting together kind of this longer-term view of exactly where those ads have come, putting this in the context as well of all the jobs data and the employment situation that we're getting this week. It, of course, precedes the jobs data that we're going to get tomorrow, the jobs report from the Bureau of Labor Statistics. And all of this considered, what we had seen in the past is that the two might not marry up the same that we would have expected, where you could get a blowout on ADP, but perhaps a lag or a miss on the expectations in the monthly jobs report. JOLTS, we saw that tick down yesterday slightly, but still hovering in the range of some of those record highs. So all of that considered, look still across some of those key categories in leisure and hospitality that had gotten hit the hardest on the onset of the pandemic, retail as we continue to track where those jobs are coming back. But at the end of the day, it's also still going to come down to wages and how much new employees are getting paid or able to negotiate in this job environment and this market, which we know is already cutting in to so many of the margins for businesses too.
Right on. And you know what else is bothering me here too? Let's say we do get a sub 100,000 print on non-farm payrolls tomorrow, which is possible. The president, I think, teed that up in his op-ed here a couple days ago. And of course, this ADP report does nothing to help that. Now you will have concerns about a recession. That will fuel that recession narrative on Wall Street and with others in the business community. At the same time, the Fed is still going to be out there raising rates by 50 basis points probably at its next few meetings. That is a terrible setup for this market.
Yeah, we're going to be keeping a close eye on all of this economic data. Sticking with the conversation, let's welcome in our first guest to break down how this will impact the markets. Joining us now, we've got Quincy Krosby, who is the LPL Financial Chief Equity Strategist. Quincy, great to have you here with us this morning. First and foremost, want to get your reaction to a bunch of the employment situation data that we've seen come out to the course of this week and, of course, leading up to tomorrow's jobs report as well.
You know, it's interesting because what we're seeing, just a change. We don't know if this is now a trajectory or just a one-off. But if you looked at the conference board, for example, jobs hard to get, you're starting to see a little bit of a shift there. Then you also saw in the ISM, Institute for Supply Management Manufacturing report, take a look at the jobs aspect, employment. That was down a bit. Tomorrow, we also get the Institute for Supply Management Service Sector, which, of course, is the largest. I mean, we're a service sector economy. It's going to be interesting to see what the employment numbers look like in that report. The question is, does the Fed like this? Because what the Fed needs is to get those wages down, get the negotiating capability to get higher wages, to get that down, because that, of course, will help bring down that price wage spiral, which has taken hold. Companies, small, large, and medium, have got to pass that higher price of labor onto the consumer. That's inflation.
Quincy, isn't this a terrible market backdrop? We're seeing decelerating job growth. Saw it here again in this ADP report. Now we're looking at several more rounds of rate increases. What case is there to be optimistic about stocks here?
Well, yeah, at some point, the Fed finishes, right? The question is, does the Fed break anything along the way? They have actually they've come out, they've talked about pain, you know, they use that word. You got to take them seriously on that. And you know, because they have started to talk about the need to get the number of jobs down. Because the more you take away the number of jobs, the supply of jobs gives the labor going in there get more of a chance to get higher wages. Take that supply down and you cut the ability to get higher wages. So you heard Christopher Waller give this speech in Germany just a few days ago, and he mentioned, you know, what has to be done with the job market. Look, It's not a science. That's the issue. It's fine tuning, and it's very difficult for the Fed that really just has blunt instruments to fine tune.
Quincy, you mentioned that the wage pass on is a major part of the inflation scenario, but another part is the supply chain scenario as well. And so with that in mind, would you be leaning your equity strategy more towards companies who are able to mitigate some of the headwinds on the wage front or on the supply chain front right now?
Well, obviously, it would be good to get both. But one of the things that we're seeing is we expect the supply chain to ease, even at the margin. That's what we're looking for, that these headwinds ease at the margin, because the expectations is they'll ease more. So you just give the example of China. You open up Shanghai. It's going to take time before people go back to work, go to the factories. Shanghai is what? 25 million people. It's 7% of the Chinese $17.5 trillion economy, but it's one of the most important. So you expect to see the port there, which is one of the most important global supply hubs for the world, for the supply chain. That should start to ease as well. And then the factories beginning to work should ease. So that's important. But I have to say, you listen to companies and they talk about inflation, but they talk about the wages too. We're seeing freezing, right? Hiring freezes. We're also hearing the chatter amongst companies of a whisper of companies saying, hey, let's be a lot more careful with hiring. You know, they don't want to come out and say we're freezing, but you know that they're moving in that direction when you're much more careful. That actually should start to tamp down the higher wages and the ability to get higher wages.
All right, being strategic in their hiring plans is what we've heard as well from some of those companies. Quincy Krosby, who is the LPL Financial Chief Equity Strategist. Thanks for the time this morning. We appreciate it.